Happy birthday to me. Happy birthday to me. I took some time for my birthday party. I have a family that loves me, and I took some time away to come and talk to you guys about what to expect on the stock market this week. There is a 20% pullback expected that could occur this year, and it's going to be a doozy. So I'll buckle up a seatbelt, hit the thumbs up button. We're going to get started on the Black Financial Channel right now. Hey, what's going on, guys? Welcome to a special happy birthday, Dr. Boyce edition of the Black Financial Channel on theblackfinancialchannel.com. We talk about Black financial news and commentary every single day. We break down stock markets, we break down investing, we break down Black wealth, and we do it under the B1 philosophy. B1 means that we make ourselves the top priority. B1 means that we understand Black people can be number one in wealth building within the next 50 years. B1 also means that we must be one in order to be successful. So learn how to work together and resolve conflicts so you can do better. If you agree with this philosophy, the B1 philosophy, put a B1 in the chat. Hashtag B1. What's going on, Uman and Tony C? My name is Corey and Phil J and everybody else. And yeah, and I would like some happy birthdays, please. Everybody who wants to share a happy birthday, if you could, because it's my Father's Day and my birthday, right? And it kind of sucks. Kind of feel like I'm getting ripped off, right? It's kind of like having a birthday on Christmas and people give you two gifts wrapped up as one. Don't nobody want that. Don't nobody want that. But today is Father's Day, and it's also my birthday. And my kids all called me this morning and wished me a happy Father's Day, and I appreciated that. I'm integrating some of them into the family business. Also, today's my birthday, so my parents came up to visit and stuff like that. So let's get started. Let's jump into the conversation. Hit the thumbs up button if you haven't done it yet. So let's talk about what's going on. Here's why I decided to do this quick little podcast. I literally stepped away from my birthday party, but y'all know that y'all my family too, and I love you and I appreciate you and I want you to do well. So it can't stop, won't stop. I do this every day, birthdays, holidays, it don't matter, because we got to be serious about building Black wealth and making each other better. So here's what I read today that I think you want to pay attention to. This is an article on CNBC about an economist named Mark Zandi. I think he runs a company called Zandi Research or something like that. Or he's the chief analytics officer, or sorry, he's Moody's Analytics chief officer or chief economist, excuse me. His name is Mark Zandi. And here's something that he said that you want to pay attention to. This article's in CNBC. Basically, it says that Moody Analytics, Mark Zandi, has a message for investors. Brace for a significant market correction. In case you don't know what a correction is a downturn. A correction means the values of your stocks could end up hitting the floor a little bit, getting low to the flow. And it may last for a while. It's not going to be like the pandemic decline. The decline during the pandemic was easy. That was like shooting fish in a barrel. When that one day crash occurred, I told you guys buy, because it was probably going to come up pretty quickly because the market was going to overreact. Why is that? Well, because there was a big virus that was spreading throughout the world. This virus was hitting city after city, and it flew faster than the speed of the internet. This virus infected 99% of the population. You know what that virus was? What was that virus? It didn't start in Wuhan. It's a virus called fear. Fear is a virus. And the virus of fear, when it hits financial markets, it creates a tremendous buying opportunity. Warren Buffett used to say that you should be greedy when others are fearful and fearful when others are greedy. So when everybody got fearful, I told y'all to go get greedy. And what happened last year? A lot of y'all made big money last year because you went and did what we talked about. You went out, you started buying stocks, and you dug deeper into the market. And next thing you know, a lot of your lives have changed. A lot of you will quit your jobs. I see you out there. I hear you when I go to these events and I talk to you. So here's the deal, though. This downturn is going to be a little different. This is a little different. And this downturn is a downturn that is not going to occur because there's something wrong. This downturn is going to occur because there's something right. This downturn is going to occur because the economy is overheating. You've had the Fed pumping up the economy for a very long time. What that's done is that's inflated the price of your stocks to a tremendous level. The big fear was inflation. Well, now they're finding indicators that inflation is going to be a problem. And in order to deal with the problem, they're going to start raising interest rates, reducing the money supply. They're going to do all kinds of things. They're going to stop the buyback program. And basically, you're going to start seeing a slowdown in the equity markets. And now, how long is that going to last? Precious, I wish I could tell you. I wish it was like the pandemic where that recovery occurred in about 3 or 4 weeks. But you could have a bear market. And if you have a bear market, which is a decline of over 20% over more than a couple months, bye. See you later. Bye-bye. If you have a decline in the market that lasts over 2 months, at a 20% level, then most bear markets tend to last for 14 months. And so give me 1 second. All right, see you later. Thank you for coming.
Happy birthday.
Thank you, thank you, thank you. Bye
Thank
bye.
you for
See you
having
later.
me.
See you later. So that was my family. Y'all can hear me saying goodbye to my family. I'm on my podcast, by the way. That's why I'm acting so strange. But anyway, okay, let me get back. Let me get refocused again. Sorry, guys. I had, gotta say happy birthday and goodbye to the families. But here's the deal. So here's what you're dealing with, right? So you're gonna probably have a decline in the market. It could be a bear market. Most bear markets actually last about 14 months. The last bear market was easy. The last bear market lasted about maybe 3 weeks. So you got lucky last time, right? This time you're talking about a bear market that can last all the way through the year 2022, maybe into the year 2023. Now, does that mean that there aren't any buying opportunities out there? No. But what's going to happen is you're not going to see these across the board gains that you've been seeing over the last, during the pandemic. You're going to also see spots where in pockets of the economy, you're going to see stock prices move upward, but there are going to be some other pockets where things are overvalued. And as a result of everything being overvalued, you're going to see some of these stocks start to deflate. And so effectively, you're just seeing a major shift. Zandy's 100% correct. The Fed is going to have to put the brakes on this economy. The Fed has been in denial. They've kind of acted like nothing's wrong, I guess, because they're trying to save face. But many experts, like Mark, I think it's Tudor Jones, I think it's Mark Tudor Jones or Paul Tudor Jones, whatever his name is, people like that have said that the Fed has been behaving entirely inappropriately when it comes to dealing with the risk that exists in this economy. So your biggest risk before was an economic crash or a recession. Your biggest risk now is an overheated economy with runaway inflation, and they're not going to allow that to happen. And also, you have some other weird issues like an undersupply of microchips being made available. So that's causing prices of all kinds of things to go up. I had no idea how crazy the microchip game is. The microchip the microchip conflicts and microchip scarcity issue to me is going to be somewhat like uh, Middle Eastern oil. You had wars in the Middle East because everybody's trying to get the oil. Well, now you've got this problem where most of your microchips come from one company in Taiwan, and I think Intel makes a bunch of them, and then Samsung makes the rest. So there's a massive shortage of microchips, and it takes billions and billions and billions of dollars to build a new microchip facility. Like, it's not something where you just say, okay, let's just put some money on it and make it and fix it in the next year or two. No, the United States is making independence like a top priority in the new bill that Joe Biden's trying to get through Congress, which he probably won't get through because Congress likes to fight. China is making microchip independence one of its top priorities. China is going to get it done faster than the United States because they don't have all the squabbling that we have in our capitalist democracy. They tend to just tell people what to do and everybody does it. But basically, as a result of that, you're seeing a lot of inflation that are coming from these supply chain problems, partly stemming from what's going on with microchips, but in a lot of other areas like the labor shortage that's occurred since the pandemic ended. A lot of people are switching professions and don't want to go back to their jobs. So it's going to be a real interesting economy. I think your stocks are going to be fine. Like, I wouldn't walk away from the stock market or anything like that, but just be ready. So what you may want to do if you want to take advantage of this, keep some cash on the side in case you see a buying opportunity. Maybe you see a blue chip company that tanks or something, and maybe that's a buying opportunity for you to dive in at a good price. But just be patient because you could feel a little bit of pain, and it's going to be a little bit sad, but that's what it is. Gavin, what about my AMC shares? I don't know what AMC is going to do. I'm going to hold on to my AMC, but I'm selling the options on my AMC every single week because I don't trust the company. That stock could pop like a balloon any day of the week. It can literally go down from $57 to $10. So just if you jump in at your own risk because you could lose everything. So anyway, guys, I'm about to get out of here. Feel free to join us Tuesday for class in the blackstockmarketprogram.com. The first month is free. The URL is right there on the screen. Hit the thumbs up button, share button, subscribe button before you go. And I will check you guys out and see you soon. I'm about to go back to my birthday party. Have a good day. Talk to you soon. Love you. Peace.